But it's not just in materials or Facebook or anything else you spend it on. It's also your time.
Yeah, 100%.
Right. I think most people ignore the time component of putting it together. Like there's some very successful marketing campaigns from renovators who've simply just gone around for the 3 blocks around them and hung door hangers.
Yeah, for sure.
Right? Now, but it still takes time for you to hire the employee to go out and do those 3 blocks of door hangers. So you're tracking that door knocker time. Once you have a marketing strategy that works, the more you use it, the lower your acquisition cost is going to drop.
Yeah.
Because you're more familiar with how to execute and how easy it becomes. The hard part of marketing has always been the testing.
Yeah.
And it doesn't take a whole lot to realize that 90% of people do it wrong.
Okay, welcome to the podcast. Today we're going to talk about, you're going to hear a lot of theory out there about what marketing is. Our definition is very different. It's going to kind of flip you on your head. You're going to realize, well, that's a different way to look at it. But it's coming from a numbers point of view so that you can actually calculate where you're going to spend your marketing money, if it's worth spending it there, and then you get results from it and start to shift. Does it make sense to spend money there, spend money over here? It becomes very predictable. So our point is marketing is about predictability, and that's what we're going to get into today.
I'm Dennis.
And I'm Greg,
And this is the More Profit, Less Stress podcast.
where we provide the tools for more profit and less stress in your business now so you can turn into a valuable asset later.
There's a lot of misconceptions around marketing too.
Yes.
Like I think it's impossible today for me to flip through my Facebook feed without seeing hundreds of marketing companies all telling me how much money they're going to make me, but yet how skewed all their ratios are for what actually is considered to be good and decent marketing, and what they teach each other is good and decent marketing versus the reality of what actually is a good and decent marketing. And when I refer to that, I'm talking specifically about marketing spend.
Yeah.
Like there's all kinds of like, well, you should spend 20% of your revenue on marketing to make good money back, up to like, well, 30%. I think the most common one I hear is 10%. You should be able to dedicate 10% of all of your revenue back to marketing. But
It's crazy. It's and I think to your point, if you asked a lot of, I'm sure anybody watching this, if you ask a lot of marketing experts or just anybody in business, what's the definition of marketing? They'll probably tell you it's, branding or your logo or.
I'm going to spend tens of thousands of dollars with you to help you come up with a really good logo. And build your brand.
Right. Or your vision and mission statement, or there's all sorts of combinations of words around marketing, but they're usually about things that consumers see.
Right.
That's usually what defines their definition of marketing. Where our difference is, or where our perspective changes on this is this. Like, if you really understand, and we do this in a lot of our podcasts, but if you look at a profit and loss statement, you got revenue minus cost of goods equals gross margin minus your operating expenses equals profit. So in the operating expenses, everything should be a percent, or everything is a percentage of revenue. So
your rent's a percent.
Your
salaries are a percent.
Exactly.
Your salaries a percent. Your marketing's a percent.
Exactly. So in say like a lot of bricks and mortar businesses, rent would be in expenses, and it's usually around, like a healthy company, it's usually around 10%. Really healthy company would be lower than 10%. Like a department store could be lower than 10%. But an average sort of bricks and mortar business, like an office or a smaller store or restaurant, if you can get rent to 10%, you got a shot at making money. And back to your point about wages. If you can get wages down to give or take 10%, you probably got a good shot at making money, because just rent and wages be your two biggest ones. Well, then we're going to get in the marketing conversation.
Yeah, but if it's rent and wages both equal 10%, you're now at 20.
Yeah, exactly.
Right.
So there's 20.
And by the way, when we say wages, we mean non-cost of goods wages.
Correct. Yeah, absolutely. So if that's the case, then marketing should be one of those main expenses that's a percentage of revenue. And to your point you brought up earlier, if, like, let's just do some quick math. If rent is 10% and wages is 10%, and it's recommended
20%.
Right, and it's recommended I got to spend 20 on marketing. Now you're at 40% of revenue, and that's all you've done: rent, wages, and marketing. And you haven't got into utilities and bookkeeping
fees,
and accounting and insurance and
loan payments,
store bags and interest on payments and like all those other expenses that come up, whatever they happen to be. If you got benefits, if you got like all that stuff, and we still haven't talked about profit. So if marketing's 20 and rent and wages are each 10, you're at 40. If there's no other expenses and you want to make, say, 10 profit, that's it, that's 50. your margin's got to be 50 just to cover that. Now, if you got other expenses of, say, 10%, now your margin's got to be 60. And there's very few business models where the margin actually shakes out at 60. So a marketing operating expense of 20, if someone advises you on that, probably they really don't understand at all. Or maybe you have a very unique business where you can get away with a 60 or 70 margin, which can be the case. It's rare.
But you better know that going in.
Yeah, totally. So our whole point, what is marketing? If you kind of look at it from a completely different angle, which is it's an expense line. And, with a lot of our clients, usually they max out around, 5?
We try for 5.
On the low side, they might be 1.5 or 2, depending on the business model. But let's say it's 5, just an example. Then it really means they're willing to spend 5% of their revenue to do that revenue. So, let's say $1 million. If they're projecting to, or if they're budgeting to spend, or if they're budgeting to do $1 million in revenue, then at 5% marketing expense, they're prepared to spend $50,000 in marketing to do the $1 million. Perfect. So then they go spend the $50,000, and then it gets into advertising strategies, right? Like, how do I put a marketing plan together, and what do I do, right? So now the question becomes, for each strategy, where is it equaling 5%? So if I got a
Now, when you're calculating 5%, are you talking on new client acquisition or reoccurring monthly revenue?
Great question. So I know with the tool we provide clients, we allow them to calculate both ways. So
See, my preference has always been on new client acquisition, because whether or not somebody recurs has nothing to do with my marketing. It has everything to do with my training and my staff.
Unless you spend marketing on reoccurring clients, like a store.
Right.
Yeah. But a business like ours, we don't. So totally agree. Or a lawyer, you don't spend.
Well, a real estate agent doesn't get very many reoccurring transactions.
Yeah, exactly. Yeah. But they wouldn't spend much marketing on reoccurring. So yeah, agreed. So if it's 5% of revenue for marketing, then it actually means you're prepared to spend 5% of an average transaction. So, let's take it just from your experience. If we took $1 million revenue business, and I know this is all over the map.
Let's use renovations.
Okay. So
let's say the average renovation is $30,000.
Okay. So average transaction's $30,000.
Yeah.
So then you're prepared to actually spend 5% of that $30,000 to get that transaction, that new customer, which is $1,500. So I'm prepared to spend $1,500 to get that $30,000 average transaction. That's called an acquisition cost. So when you can break that down to what's my acquisition cost, meaning what am I prepared to spend to get that deal? If I know it's $1,500, then the marketing plan is where am I whenever I spend money, for every $1,500 I spend, am I getting a new client, like a new transaction? And you compare them. And the ones where it's costing you $1,500 or less,
double down.
Yeah, exactly. In fact, go to the bank and borrow money and do a whole bunch, because then you might end up doing $2 million in revenue, right?
Well, especially if you know where it's going. Like, I think that's the other problem is most people don't actually track where their marketing spend is going.
Right.
They don't track what's actually working. Like, that's why anybody who's listening knows that there's often you'll get a survey from someone you've done business with that says, how have you heard about us? Right. That's literally them trying to track back, where did you come from? How did you hear about us, and what's actually going on? Yeah. The other side of it is it can be really difficult to track down to individual transactions, because some people might not remember how they heard of you, because there's always a volume of things. Like, I don't remember when I first heard about a restaurant, but they went into the restaurant. Yeah. So if you're doing a targeted campaign, the trick is to find out how many new leads did you acquire over and above your normal volume of work, and say, okay, well, I can assume then that these 5 or 6 new ones came from this concentrated effort on doing this. So like, even with my clients, I have them target like postal codes or zones or areas with different tests to find out which test is pulling the most, and then duplicate that somewhere else.
Go see Mom, bud. He needs water.
He's tired.
Yeah, no, it's and what we're talking about is completely different than the normal way people explain marketing. Totally different. Like, just the branding, the the website, all that stuff, the logos, the mission, vision statement, whatever, those are all just tools. But it really is about what we're talking about. It's about how do I know? So just kind of back to that thing. If we use a $1,500 example, for every $1,500 I spend, am I getting a $30,000 transaction in the case of the renovator?
Right.
Like if you're a store, and your average transaction's $100, then if you want to spend 5% on marketing, then for every $5 I spend on marketing, am I getting a $100 transaction? So that $5, that's acquisition cost. So marketing is just about what strategies am I doing? Where do I spend the money? And when I spend the money, to your point, measure it. Am I getting a customer for every $5 I spend or $1,500 I spend or whatever your acquisition cost is? So you have to calculate your acquisition cost. That's it. Like, but without that, you're running blind.
But it's not just in materials or Facebook or anything else you spend it on. It's also your time.
Yeah, 100%.
Right. I think most people ignore the time component of putting it together. Like there's some very successful marketing campaigns from renovators who've simply just gone around for the 3 blocks around them and hung door hangers.
Yeah, for sure.
Now, but it still takes time for you to hire the employee to go out and do those 3 blocks of door hangers. So you're tracking that door knocker time. Once you have a marketing strategy that works, the more you use it, the lower your acquisition cost is going to drop.
Yeah.
Because you're more familiar with how to execute and how easy it becomes. The hard part of marketing has always been the testing.
Yeah.
And it doesn't take a whole lot to realize that 90% of people do it wrong.
And back to your point, if you're measuring and your acquisition cost will drop because if you got, say, 5 strategies you're doing and 3 of them, let's go back to our $1,500 example. If 3 are less than $1,500 acquisition cost and 2 are higher, if you drop those 2 and you do more of the 3, your acquisition cost drops.
Down. Yeah.
And if your acquisition cost drops, then 2 things can happen. One, your marketing percent in here can go from 5 to maybe 4 or 3, and that 1 or 2% you save goes to profit. Great, profit goes up. Or you keep spending 5% on ones that are working, and then instead of doing $1 million, you might end up doing 1.5 million, 2 million. Like in other words, like if you knew on this strategy right here, every time I spent my acquisition cost, I got a client or a customer, you'd pour more money on it.
It's an unlimited money printing machine.
Yeah. So instead of now you budgeted to do $1 million and you figured out your acquisition cost is $1,500, the minute you find strategies where it's predictable that the $1,500 gets you customers, then just spend more money and do 1.5 or 2 million. And that's how you grow profitably. Love it.
Then you got to train your staff.
Yeah.
Make sure you got the right people on board. But once you have the marketing thing figured out, it does become, in a sense, its own money printing machine.
Absolutely.
Like, I'm not sure very many other places you can go where you can spend $1,500 to go make 30 grand.
Yeah.
It doesn't have it in a mutual fund. Now, of course, the 30,000 is just revenue. It's not margin and profit and everything after that. But you get the idea of how the growth works.
Yeah. So it's, again, just recapping how most people would explain marketing or how most companies would explain marketing. It's about, they tell you about the tools, the brand, the logo, the colors, the culture, I don't know, whatever, the website, the whatever. That's all great. Those are tools, but they're tools to help you do what we just talked about. What we just talked about is actually what marketing is, which is no different than what's employment, right? Mm-hmm. It's about you hire people to do the work, and those people need the salaries, the wages need to be a percentage of the work. Rent, what's rent? It's you got to get a space and you do your thing in that space, and it's a percentage of the revenue. What's bookkeeping? Got to process books so I can pay taxes, and it's a percentage of the revenue. Like everything is.
Well, even for the commercial landlord, he has a mortgage to pay and a property tax to pay, and he's got to put your rent above what he has to pay in order to make money and pay down everything. Totally. So when it comes to the marketing side of things, number one, we like to say it's safe to aim around 5%. Now, a lot of people are going to tell you to spend more. You can spend more. We're not telling you not to spend more if you know your numbers. If you don't know your numbers, please learn your numbers before going and spending more, because you could have a great marketing campaign that takes you forever to catch up with financially because you spent way too much money on it. And all you've ended up doing is working for the marketing company because all the money you're making goes back to them. Yeah. So if you want to go beyond a certain budget, be educated on what that means and how much you can actually afford to apply.
Totally. And just to go back to one of the things, like in closing, I guess one other thing you said, because a viewer might be saying, well, wait, like our industry, right? You advertise, you get a customer or a lawyer or a dentist or a doctor or some business where it's a reoccurring income, right? A mechanic maybe.
If they do a good job, it's recurring.
Yeah, totally. So you spend that $1,500 or whatever your acquisition cost happens to be to get that customer for a one-time transaction. There are industries where it does make sense to say, okay, well, what about in an industry where for sure the customer, if you measure this, the customer buys 6 times a year. So they spend $1,000 each time they buy. If you look at one transaction, you might say 5% of $1,000, so $50, right, is the acquisition cost. But if your data says that customer reoccurringly buys like 6 times a year, then you might say, so for those watching question or math, you might say, okay, well, if they predictably buy 6 times a year, then they do $6,000 a year. So I'm prepared to buy that customer for 5% of 6,000 instead of 5% of one transaction. So then you take your 6,000, multiply it by the 5%, now you got $300 or whatever it is. Or, no, sorry, 5% would be $300. So my acquisition cost is $300 versus $30 for one transaction, and that works, right? If you're tracking and your customers are predictably buying that many times a year, for sure, absolutely.
And then again, it becomes that unlimited money machine. But you have to know where your numbers sit before you can make those calls. And also, it's not just important to know how much to spend on marketing, but when to spend it. Like in retail, you've told me this before, the vast majority of money is made around Christmas.
Yeah.
So if I'm spending all of my marketing dollars in June and July thinking that, well, this advertising worked at Christmas, so I'm just going to run this exact same marketing strategy, but in June or July, and I'll rake it in over my competitors. Well, if nobody's buying those times a year, it doesn't matter what you invest in marketing.
Right.
So you also have to learn the seasons upon which your customers buy and what they buy in those seasons.
Yeah.
It is super hard to sell landscaping stuff in December.
Yeah, totally.
Depending which state you're in, and of course, which in our case, in my case, Canada, so which province I'm in. But it's going to be really hard to convince somebody to buy a hole digger, an excavator, and something else for planting trees in the backyard of somebody's property in the middle of December.
Correct.
So we don't waste our marketing dollars then. We wait and we put the marketing dollars to work when the customer is most actively looking for what we're providing.
And you can actually, it's a good point you're bringing up, you can look at your budgeted revenue and say in December I'm planning on doing $100,000 in revenue, but in July I'm planning on doing $50,000 in revenue. So you can take the $100,000 in December, divide by your average transaction, or divide by the acquisition cost, either or, but take the $100,000, divide by your average transaction to figure out how much money you're prepared to spend in marketing, because it's that average, it's the revenue divided by the average transaction gives you how many transactions you're planning. Take that number, multiply it by your $30 or $15 or $1,500 or whatever your acquisition cost is. You're prepared to spend that on marketing. But in July, if your revenue's half, but you're still going to do revenue, you can take that number, divide by your average transaction, gives you how many transactions you think you'll do, multiply that by your average transaction, there's your marketing budget. So this methodology we're talking about allows people to budget for that. Like, and in some cases, like tree planting in the winter, you may not want to market at all. but again,
or it depends where you're marketing at that time of year.
Yeah, but
right.
Some industries, if you're still going to sell stuff, it's just less. Like we live in Arizona, and I think there's something like 1 million snowbirds come here for the winter and leave for the summer. So you still want to market in the summer, just less. And then you're like, well, how much? That's easy. Take the revenue, divide by average transaction, gives you a number of transactions times acquisition cost. There's my marketing budget. So you can do it every single month. It's an easy way to predictably, and again, that's
know
marketing.
What to spend.
Yeah, that's marketing. Marketing isn't a lot of the fluff you hear.
Well, a lot of the fluff is more like how to write an advertisement to get somebody to take an action.
Which is
marketing
a
is
great
really
tool.
a plan.
Yeah,
right?
exactly.
So you might want to pause this and go back to listen to that last part like 7 or 8 times, because there's a lot of information in there, hard to process right away. But
well, we have a tool for it. They literally can
dump the stuff right in there.
Yeah, you get into the program. We have an actual tool that everything we talked about today, you just plug your numbers in and it tells you your answers. Yeah, absolutely.
It tells you what you're spending on marketing. It actually tells you your average return per strategy. There's even strategies on how to build your strategies. so that we're not fighting with that either.
Because your point to take all that math and try and do it up here,
No.
it's hard.
Well, I still use calculators and spreadsheets and everything else to track things in my business too, because I don't have the time to do all the mental math.
Yeah.
But the better you get at it, the more intelligent decisions you make.
Yeah.
And then when you're interviewing marketing companies who want to come and do the thing for you, you can actually ask way better, more intelligent questions to find out if they can actually deliver or if they're just selling you the latest thing they learned.
That's actually, sorry, we should add to what you just said, because what you just said is super important. Marketing company comes to you, says, I got this. So I know of an example where a marketing company from a community came in and said, we do this local community paper, and you got to buy a spot and you got to buy it for a year. It's like, okay, the client says, okay, you got to buy it for a year. And how much is it? It's like, off the top of my head, it's like $3,600 for the year. It's like $300 a month. So $3,600 for the year. Great. Well, that client's acquisition cost was $14. So I'm not going to be able to do this math in my head, but $3,600 divided by $14. Well, actually, let's do it, because this would be great for the viewers to walk through an exercise like this. So $3,600 marketing strategy for a year divided by $14 acquisition cost.
257 clients.
So divided by 12 months.
21 new customers a month.
Yeah. So the question to the client was, can you get 21 new, from your experience, can you get 21 new customers per month from that little ad in a community paper? And she's like, no. Perfect. Then we don't do it. So there's no guesswork. There's no like, oh, well, the person's like, oh, this is a great idea. And all these businesses around you say it's a great idea. And then back to, why do 80% of businesses go bankrupt? So she went and asked the other businesses in the little mall beside her, hey, what about this local paper? Like, oh, it's the bomb. You got to do it. It's the way to go. How many customers did you get from it? I don't know, but you got to do it. They had no idea. So they're spending $3,600 a year is not going to bankrupt a business, but you keep making decisions like that, and you're on the path to bankruptcy.
Putting a lot of holes in your boat.
Yeah. So just a great example of what you brought up. Yeah. Love it.
So when it comes to marketing, understand a couple of things. Number one, your acquisition cost, what it actually costs to get somebody. Base that upon your revenue. Also figure out how many transactions they're doing and be willing to spend. I mean, you can spend more than 5%. We recommend 5% or less. But there is some testing and experimenting that goes into spending a little bit more. Just do it smart. Do it intelligent. Know what you're getting into. And don't overspend. Yeah. If you can only dedicate 5%, but you don't get anything month one, then don't decide to suddenly triple it to 15 the next month. Play with that same budget until you finally find the thing that works. And it might take a little bit of time, but that's okay, because you'll waste way less capital than going all Hail Mary the first month one.
Yeah.
Well, I knew of a chiropractor who was starting up a new business, and all he ever did was put out flyers in the community 6 months before, 3 months before, 1 month before, and a week before for his open house. That was his entire marketing strategy. And by the time his doors opened up, he was scheduled out for 2 months.
Love it.
Because people were super excited about the fact that he was there, and that all that cost them was time. Now, of course, they tracked the time.
Yeah.
But it also doesn't have to be complicated.
Thanks for listening to the More Profit, Less Stress podcast. If you liked what you heard, be sure to subscribe or follow on your favorite podcast platform and leave a comment or review if you're feeling generous. To learn more about us and what we do, check out our website. Until next time, take care.